All right, good morning, everyone. It is 7:14 on the morning of December 27th, 2022, and this is my pre-market strategy session. Today, what I am seeing is the Qs back inside of this previous gap. Now, this gap no longer exists. This is a gap that I've been watching now for, what was it, I guess, close to 6 weeks here. Let's see, yeah, since early November here to late to mid December here, and so this gap here in the circle that I just drew right in this area, technically speaking, is no longer a gap. The gap has been filled, and I was looking for this to happen sooner rather than later. Meaning that instead of seeing months go by before this gap was filled, I expected it to really only actually last for a matter of a few days. Actually, it lasted for a few weeks. So, some things just don't happen the way you expect to. Actually, I mean, that's the sort of the mantra of the market is, trick, trap, fool, and frustrate. Trick, trap, fool, and frustrate. Right. So, I've been waiting for this gap to get filled and for the Qs to find support right around this 267-ish area. So on Friday's close back here, you can see it closed just beneath the gap right there, just beneath that support level. Now here we are this morning opening up at just above that support level. And originally I was looking for this gap to get filled prior to the week before Christmas for Christmas rally, and it didn't happen that way. Obviously you can see here leading up to Christmas, right before the week before Christmas, it finally came down and filled that gap, and spent a few days bobbling around the bottom of the gap, sort of in the same way it did over here. And so I was looking for it to come down, fill the gap, find support here, spend a few days finding support down here at the gap, and then take off. So now, I guess, perhaps we're about a week late, find some support, and then go back to the upside again, is what I'm expecting. Now, that, doesn't mean that's what's going to happen. So I'm, of course, have to just play it, just trade the chart that's in front of me. So today, what I'll be looking for is something akin to an open, something, if it opens up above the gap, that'd be great. But basically, let's see, here's the market open at 9:30. So if we can get it to open up like somewhere above the gap, dip below, and then move back again across above its open price. If it dips down and then comes back up above its opening price, that's going to be a long for me. If instead it comes down and finds more resistance there at this 267-ish area, and then starts to go lower than its morning low, then I'll get bearish. Technically speaking, we are in a bear market, and so the trade to the downside is statistically more preferable than the trade to the upside. This week has a 42% chance. The week between Christmas and New Year's has a 42% chance of being bullish. Historically speaking, if you go back for 20 years, there's only a 42% on a weekly chart. Let me go to a weekly chart here. And let me get this stuff out of the way. And I'll get all this stuff out of the way too. Let's get that out of the way. And I'll leave the gap. So the odds are that this week will be a red candle, right? I'm just gonna, I'm just gonna be using a rather short time frames to trade, which is going to be somewhere, around an hour or 2 hours, depending. Because if we get support right here, it'll be a pretty good indicator of making a bull run, at least to the top of this range. The VIX is still in the 20s, and that's considered not an investable market. So once it starts breaking down into the high teens, you'll see more money coming in for the longs to establish positions. The 10-year, 2-year is still inverted, quite inverted. And again, I mean, I think I say this on every video, is the yield curve can be inverted for anywhere between 12 and 18 months before we see it normalize. And when we see it normalize is where we see the crashes happen. This is 2001, this is the dot-com bubble, and this is the housing bubble back in 2007 into 2008. Bitcoin is doing a pretty good job of staying above its trend line right here. I think this move is temporary, and it's just a matter of time. I think roughly mid-February we're going to see Bitcoin down in the $13,000 area. The dollar. So the dollar is setting up for a Wyckoff distribution. Perhaps we'll see. I expect to see, if you're familiar with Wyckoff distributions, I haven't gone over every aspect of the Wyckoff distribution, but it does this thing right here, and eventually it goes back down again. But in the meantime, we could see new higher highs on the dollar here pretty soon. I think this distribution pattern hasn't played itself out completely by any means. All right, so that's pretty much my strategy for the day on the Qs. Really is, open, find support and move higher past its open, or open, drop and find resistance and start sinking past its open. All right, everybody, good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.